Welcome to Primary Markets TV Asia Pacific, your update on newly listed securities for this week, and of course, those that have listed over the past month. I'm Dan Barnes. Coming up this week, we're expecting IPOs for 29 companies across the region, with ASX, Hong Kong Exchange and Japan Exchange leading the charge on the majority of those. In the fixed income space, we've continued to see strong issuance of corporate bonds. And if you look at emerging market data overall, Asia has been the leader this year for issuance of credit, according to data from Morgan Stanley Research. Last week, we saw some major IPOs from JD Health and PopMart, both in Hong Kong. Joining me now is Dickie Wong, Executive Director of Research at Kingston Securities in Hong Kong. Dickie, welcome to the show.
Thank you, Dan.
We've seen a lot of IPO activity in Hong Kong over the recent months. Can you tell me, what's your expectation for continued activity for new issued securities at the end of this year and then going into 2021?
Well, honestly speaking, the general IPO market is quite hot in Hong Kong. There's no question that even Ant Group failed to be listed in Hong Kong and mainland China just a month ago. We can see a lot of IPO just only for just last month. There are almost 20 new companies listed in Hong Kong, mainly the main board companies. Some of them are the gem board. We can see some of the IPO received huge appetite from local investor and also institutional investor. Like some of the big name you may actually have heard of, like JD Health and also like PopMart, the local tranche received 100 times oversubscribed.
Wow.
And even on its first debut, the share price shot up quite significantly. Even like JD Health, as I just mentioned, and also PopMart listed today actually went up 80% on its first debut. So we can see a clear tendency that local investor, they like to participate in IPO just like a jackpot, or maybe they can win instant money, like after the listing, 80% gain on its first debut. But we can see like the tendency, local investor, they're now smart enough to participate in not all of the IPO, because I've just mentioned, most of the IPO listed in the past 2 months, actually more than 30% of them, they're now still trading below their IPO offering price. So not all IPO went up quite significantly in the past 2 months. Only a few of them, especially they have something in common, like they receive a huge, oversubscribed in the local investor tranche. And second of all, they may be one of the leading company in their own industry, or even they may be the largest company in their own industry. And now also some of the IPO, the reason why, because they're very hot, because their market cap is large enough to be included into all like Hang Seng, like MSCI and FTSE, all the worldwide indexes like JD Health. So that's the reason why we always talk about the IPO market is simply a supply and demand game. When the local investor, participate, and also institutional investor demand is so high, therefore will drive up the share price quite significantly, even on its first debut.
Very much so. And you mentioned there about both institutional investors and retail investors. I mean, proportionately, what's the sort of balance between those two investor groups for the big IPOs, such as JD Health and PopMart?
Okay. For all the companies that they raise money in Hong Kong, like more than 10 billion Hong Kong dollar, the clawback system will be changed. Normally, 10% will be for the local investor, 90% for institutional investor. It all depends on how the local investor, how hot is the IPO. If the local tranche receive more than 100 times oversubscribed, then the clawbacks mechanism will just claw back like 40% shares to the local tranche. So it will split into half, like 50% for international and 50% for local. So in this case, you may think that those institutional investors, they may not have received enough shares. So on the first debut, sometimes they still jump into the market and buy at a significant premium over its IPO price. This is not something so surprising because, as we have I've just mentioned, like JD Health, they will be included into some of the Hang Seng, composite index, and also MSCI and FTSE. And we have to bear in mind, any single stock will be included, not the Hang Seng the index. We're talking about the Hang Seng Components Index, and the larger and medium-sized firm. If they are included, then they may be included into the Stock Connect, the Shanghai, Shenzhen, and Hong Kong Stock Connect. Therefore, mainland investor can participate too. So this is the reason why, like JD Health, shot up quite significantly in the past just couple of days. But honestly speaking, when we talk about its fundamental, no matter like pop arts is only a toy manufacturer, but the market cap, it's like 100 billion. Can you imagine? 100 billion Hong Kong dollars. It's really huge. So if we talk about valuation, honestly speaking, it's simply too expensive.
Yeah. That's really interesting. Thank you. And then we've talked about JD Health there. Of course, JD Health is part of the larger group of JD.com and has been broken off. But it does sort of follow another trend, which is that we've seen health firms, pharmaceutical firms listing a lot and having a lot of appetite amongst investors for picking up those shares. We've also seen other trends, whether it's ESG, seen a lot of issuance focused on the gold market too. Which sectoral trends do you think are most interesting and have been this year? And then which do you think will carry through into 2021?
Okay. We can see like some of those technology, internet related, and also e-health platform shares receive significant, overwhelming participation, no matter local investor or institutional investor. But I will think this trend may continue to 2021. But actually, we have to bear in mind, Chinese government, they recently introduced a lot of new regulations to regulate all those internet-related companies, especially they seized Ant's Group IPO, and they may have more control on those financial-related internet companies. But for other sectors like JD Health, they're actually in a better shape, but we have to bear in mind, it's still a very oligopoly situation in mainland because there are only a few players in this area, and also those big names like Tencent, JD, and Alibaba, they're all the same big name. So what we can see, the regulation risk will be the key risk towards next year for those IPO. But I will actually pay more attention into those like consumer cyclical and also consumer related, especially those companies that are focused their business in mainland China. I think they can have a better shape because I really don't think that the tension between China and US will be eased in the near future. So even like Biden will be the next US president, I still don't think the situation will help a lot. So therefore, I actually will have actually more bullish point of view towards those mainland focused consumer related or consumer cyclical sectors.
Dickie, that's been great. Thank you so much.
Thank you. You're welcome.